You probably think the wealthiest people in the world are using some hidden, exclusive loophole to dodge their taxes, right? But what if I told you that the real secret isn't hidden at all? In fact, the strategies they use to pay almost nothing in taxes are right in front of you. And yes, you can use them too. Sounds unbelievable? That's exactly what they want you to think. They benefit from the fact that most people won't dig deeper. But here's the truth. These aren't some far-fetched schemes. They're legal and available to everyone. In today's video, we're uncovering 5 powerful strategies that the rich don't want you to know about. Stick with me until the end, because once you know these methods, you'll realize how much money you've been leaving on the table. Ready to turn the tables and start keeping more of your hard-earned cash? Let's dive in. The first strategy we need to talk about is maximizing deductions. It may sound simple, but the wealthy don't just take advantage of a few obvious deductions. They actively search for every possible deduction they can legally claim. Whether it's business-related expenses, real estate depreciation, or charitable contributions, these deductions can drastically reduce taxable income. And here's the kicker. While most people just take the standard deduction, the rich go far beyond that. Let me give you a real-world example. Take Jeff Bezos, for instance. According to reports, Amazon paid $0 in federal income taxes for 2 years straight. How? By utilizing available tax deductions and credits from research and development to green energy initiatives. While you may not be running a multi-billion-dollar business, there are countless deductions you can tap into. Are you a freelancer? A small business owner? Do you work from home? If so, you can deduct things like your home office, internet, or even part of your utility bills. The truth is, you could be leaving money on the table by not claiming deductions you're entitled to. The second method that the wealthy use to their advantage is tax-advantaged accounts. The average person might think of these as just simple retirement accounts, like IRAs or 401ks. But the wealthy leverage these accounts far beyond basic retirement savings. Let's break it down. Contributing to a 401k can reduce your taxable income because the money you put in is tax deferred. In 2024, you can contribute up to $22,500 to your 401k, or $30,000 if you're over 50, without paying taxes on it up front. That's a huge amount of money you could be sheltering from taxes right now, but the truly wealthy go further. High-income earners often take advantage of mega backdoor Roth IRAs, where they can contribute large sums of after-tax money and then convert it to a Roth, meaning all future growth and withdrawals are tax-free. These accounts allow them to amass a fortune that will never be taxed again. It's not just for the ultra-rich, though. Anyone can start taking advantage of these accounts today, whether you're maxing out your employer's 401k match or investing in a Roth IRA for tax-free growth. The earlier you start, the bigger the benefit. Now let's talk about a game changer for high net worth individuals: real estate investing. Most people think of real estate as simply buying a home or renting out properties, but the rich use real estate as a powerful tax-saving vehicle. One of the biggest benefits? Depreciation. Depreciation allows property owners to deduct the cost of their investment properties over time, reducing taxable income without actually having to spend cash. Think about that for a second. You get to write off a portion of your property's value each year, even though you're still collecting rent, and potentially seeing your property appreciate in value. In fact, according to a study by the Joint Committee on Taxation, real estate depreciation saves investors billions in taxes annually. But it gets better. When they sell these properties, the rich use a 1031 exchange, which allows them to defer paying capital gains, taxes by reinvesting the proceeds into another investment property. Imagine never paying taxes on your real estate profits. This is one of the most powerful wealth building tools available, and it's something you can start looking into right now if you own or plan to invest in property. The fourth strategy is something you've probably heard about but may not fully understand: long-term capital gains. This is one of the most significant ways the wealthy keep their tax bills low. Rather than earning income from a traditional job, where wages can be taxed as high as 37%, the rich focus on investments, stocks, bonds, real estate, that are taxed at much lower rates when held for more than a year. Right now, long-term capital gains are taxed at just 15% or 20% for the highest earners. Compare that to the tax rate on regular income, and it's clear why the rich favor capital gains over wages. But it's not just for billionaires. Anyone who invests in stocks, real estate, or even certain businesses can benefit from this. The trick is to hold your investments for at least a year to qualify for the lower tax rate. Think of it this way: by being patient with your investments, you could be paying significantly less in taxes. This simple shift in strategy could save you thousands, even tens of thousands, over your lifetime. Finally, we come to a strategy that's often seen as the domain of the ultra-wealthy, but in reality, it's something anyone can use: setting up trusts. Trusts are not just about passing on wealth to heirs. They can be used to strategically shield assets from taxes while still allowing the wealthy to maintain control over them. One common type is the irrevocable trust, which removes assets from your taxable estate, thereby reducing or eliminating estate taxes. There's also the charitable trust, where the rich can donate assets, receive a tax deduction, and still generate income from those assets. In 2023, a study by WealthX found that many of the world's billionaires use trusts to pass on wealth efficiently and avoid massive tax hits. But here's the thing: you don't have to be a billionaire to set up a trust. If you have substantial assets or are looking to protect your family's financial future, a trust could be a smart move. It's about thinking long-term and leveraging legal tools to keep more of your money. These 5 strategies: maximizing deductions, investing in tax-advantaged accounts, leveraging real estate for tax breaks, benefiting from long-term capital gains, and setting up trusts, are how the wealthy legally reduce their tax burden. These aren't shady loopholes or hidden tricks. They're strategies available to anyone willing to learn and apply them. By adopting just 1 or 2 of these methods, you can start keeping more of your hard-earned money and growing your wealth like the rich do. And if you want to dive deeper into personal finance tips like these, be sure to join our free financial newsletter. You'll get exclusive insights and updates straight to your inbox. Just click the link in the description to sign up. Remember, the difference between the wealthy and everyone else isn't just about how much they make. It's about how much they keep. The question is, are you ready to start keeping more of your money?